Intel beat on the top and the bottom, and they were rewarded with a sell-off of pretty epic proportions. Now, what it came down to was a little bit about uncertainty, a little bit of top line softness, but it was really about gross margins. And I really dug into this, Daniel, to kind of see what was going on. And we're going to get a full data dump on February 17th on exactly when some of these costs are going to hit. But when Pat Gelsinger came on and said he was going to double down on capital expenditures, and he's got Intel 7, 4, 3, 20A, and 18A, which are all on that's expensive, right? So what we're seeing are those expenses once they start to get into certain product categories, they hit it pretty hard. Okay. And that's how the accounting of semiconductors go. Let's say, 5% of your mix is on something that you're spending multiple billions of dollars on. Guess what? You've got to peanut butter spread that cost across those, the small amount of processors. And that's kind of where we are. But a couple of things stood out to me. So first of all, everybody's like, oh my gosh, data center group, DCG, something's wrong with it. People are, AMD is winning all the market share. Well, I think AMD is gaining a little bit of market share, but they had 20% growth, which is phenomenal. And then doing a double click on that, 53% increase in enterprise and government demands, which is off the rails. And, macroeconomically, Daniel, that says a lot of positive stuff to me about how the economy is going. If businesses are buying a lot of on-prem infrastructure, and that's exactly what this is, right? That's not hyperscalers, which hyperscalers were actually down by 5%. There was this one-time federal charge that I know Intel didn't really want to talk about that much, but I'm speculating this was not hitting dates on a few of these big lab deals that they had. There are penalties that are always involved, and they had missed a couple milestones on that. My last thing on DCG is Intel basically says we ship more Xeons in December than any of our competitors ship data center parts all quarter, with Ice Lake, which is the 10 nanometer, shipping over 1 million units. I kind of like that, a little bit of a flex, right? It's not them saying, yeah, we've got 90% market share, but essentially we shipped, more in a month than everybody else shipped an entire quarter. So taking the gloves off a little bit. I was a little bit surprised on Client Computing Group, called CCG, down 7%, and the core business, which takes out all the wireless stuff, was down 5%. There was a hard comparison in fourth quarter of 20, but even so, man, that notebook decline was pretty big, a 16% decline. I'm super interested to see what AMD comes out with, to see for if maybe it was something had to do with inventory, or it was a share loss. I do believe for this year, I think Intel will gain unit share. I think AMD will likely gain some revenue share. ASPs, right? That's a drill down that I like to do on CCG, which is essentially the pricing power. And guess what? ASPs were up for both platforms. So total, overreaction, I think, on the sell-off. You have to look at the company as a long-term play, and you have to understand semiconductors. This is not like a SaaS play where you can make a price move, increase sales, decrease sales, come out with a new product. These are real factories. These are real tangible things. And a next gen fab takes 2, maybe 3 years to get to get going. But I'm looking forward to the investor day.
Yeah, there was a number of things that Mr. Gelsinger alluded to in his remarks. You know, you talked about the client. He did talk about some of the pull forward and pull back that's been related to supply and demand. And so, of course, some orders got pulled forward, and you saw some bigger quarters. I believe last quarter was a stronger one. You know, we saw the same kind of ebb and flow this year with data center, where the early part of the year was really bad, but it was following a really strong end of the year before. So you've had a lot of supply chain related pull forward, pull back, because, you know, they're so dependent on the sales of their ecosystem, right? It's the OEMs and how much they're selling. And then, of course, with all the supply chain issues, it's been how much are they able to manufacture. You know, I thought Ohio was a really encouraging piece of news, and this isn't necessarily related to the earnings, but now you've got what, the third. So you have two fabs in Arizona. You've got the fab in Ohio here, some significant investment. You know, Gelsinger pointed to, he gave an answer that the street, they may not like it, but, you know, when you move process, and they hadn't really had a big process move in about 5 years, I believe it was, there's some costs that are associated with that. And those costs are, the trade-off is higher margins and continuing to sell old product. I mean, the trade-off, and nobody liked that trade-off either, right? Everybody was bitter about how long it took them to see Ice Lake surpass Cascade Lake. So, you know, the hardest part about Intel is it feels like the market moves the goalposts on them more than anyone else. It just feels like they get something going good, and then everybody complains. If client's good, then they're going to look at DCG. If client and DCG are good, they're going to find something obscure. Oh, your network group is down. I mean, they will find the thing to not like about Intel, and that's why it's trading at like 10 times forward earnings. When, you know, AMD is 40 or 50 right now, and NVIDIA is as well. So it's Intel as a manufacturer is held to a different standard. But I do believe they are the best positioned company on the planet to bring manufacturing here of semiconductors back to the U.S. to help us get out of a future supply chain crisis. And I think they're doing a lot of things really well. You know, the quarter's numbers were good too, Pat. You know, as we headed into what was considered sort of a very negative tech economy, interest rates rising, inflation numbers are high, a lot of kind of hawkishness from the Fed. These were good numbers. The guidance forward were good. You pointed it out. Margin is the most at-risk number right now because it's being compressed, which means they're going to have to do more sales to deliver equal earnings per share. But this quarter they did that, and there's nothing to suggest that next quarter they can't. Their guidance was very close to what the street expected, and certainly with some operational excellence, the potential to beat next quarter exists. So I'll end there because I know we got to get on to the next topic, but I'd say more good than bad, right? If we were looking at that quarter for Intel, more good than bad is a pretty fair assessment.
Yeah, absolutely. And listen, I look at top line pricing, and ASP and pricing power is more important than the cost side. I mean, I know in the end it's about, you know, net cash flows in the future, but long term is about pricing power. And if you're an IDM, it is cheaper for you than having to go to TSMC. Intel, in their model, they're capturing both, right? They capture the design value and they capture the manufacturing value. So that's why I'm not concerned. The company still needs to execute. Investors are giving them zero credit for getting into brand new categories they were never in. Discrete graphics for gaming, discrete graphics for workstations, machine learning training with Habana and more, going essentially directly after NVIDIA.